You got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up. Raise them up.
All right, okay. Welcome to the Forex Trading Asia Daily Currency Call, episode 344. It's the 29th of July, 11 a.m. here in Singapore, GMT +8. All right, so this currency call, you will get market economic updates, key support resistance levels, trade ideas, and more. So this currency call is going to be very beneficial to both the long-term investors and short-term traders. Here we will be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. Okay, so the big news item that happened just a few hours ago at 2 a.m. GMT +8, it was the FOMC statement release, and I think Kim Hong, here Kim Hong, currency analyst at LCMS Traders, will share a great deal with us on that. Kim Hong.
All right, thank you, Junwei. 9 hours after the FOMC meeting. And what do we have from the FOMC meeting? Okay, let's check it out. Okay, let's start with the statement. Well, okay, basically, to be honest, they did nothing. All right, they did nothing. Okay, so they held interest rate unchanged at the range of 0.25%. Okay, QE remains at $120 billion per month. Okay, as usual. Now, what you're looking at here right now is the statement from the FOMC. Okay, left side you have the 16th of June statement, and the right side you have the 28th of July. Okay, which was released earlier today. Okay, so what I'm going to do is I'm going to do a comparison. Okay, since they did not carry out any actions, okay, they actually did send a more optimistic tone, okay, through the interest rate statement. All right. Now, first point, you can see that over here, with progress on vaccination and strong policy support, indicators of economic activity and employment have continued to strengthen. Okay, that's the first point. As compared to the previous statement released in 16th of June, we see that it's just, where is it? Over here. Okay, indicators of economic activity and employment have strengthened. And right now, okay, from a have strengthened, they have changed the tone to continue to strengthen. Okay, so we are pretty much assured that well, actually, if you have been following the US economic indicators, you would have known, you would have seen that you know, the inflation has been continued to rise. Okay, business activities as indicated by the PMI, okay, has continued to expand as well. So, you know, it doesn't come as a surprise that the Fed is highlighting this point. All right, so that's the first point. Second point on the statement is, let me get rid of the lines. This point over here. The sectors most adversely affected by the pandemic have shown improvement, okay, but have not fully recovered. Now, have shown improvement. Let's look at the previous month's statement. The sectors most adversely affected by the pandemic remain weak. Okay, so from a remain weak, we are now seeing a have shown improvement. Okay, but have not. Okay, so basically the difference is that this remain weak part of the statement of the sentence have been dropped. Okay, remain weak but have shown improvement. Over here we have seen improvement but have not fully recovered. So we have seen a slight inclination in you know, the Fed's view on the most adversely affected sectors, okay, business sectors. So that's being the second point. Now, the third point has to do with the quantitative easing, okay, QE. So over here, we see that since then, the economy has made progress toward towards the goals, and committee will continue to assess progress in coming meetings. Now, this is actually a new line being added in into the interest rate statement that's been released earlier today. Okay, so if we were to look at the previous statement, so okay, like if you see over here, they highlighted that 40 billion per month until substantial further progress, blah blah blah. Over here, it's the same line, right? It's the same line as over here, and then they move on straight to these assets purchase will help foster smooth market functioning, as indicated over here. So this new line, okay, since then, the economy has made progress towards this goal has been added. Okay, now all in all, I would say that the Federal Reserve has actually sent out quite an optimistic view on the economic recovery. Okay, so that's pretty much it for the statement. Okay, that's not the end of what of the whole monetary policy meeting. So statement aside, let's move on to the press conference. I think it's actually more interesting, getting the information from the press conference than the statement, okay? Since, there's not much being changed nowadays in the statement, okay? So during the press conference, okay, Jerome Powell actually highlighted that, the economy is still a distance away from making substantial further progress towards the Fed's dual mandate, okay? The Fed's dual mandate, like I mentioned previously, being the maximum employment and price stability. Now, yes, no doubt that the Federal Reserve is more optimistic towards the economic recovery, but they are still quite a distance away, okay, from the full recovery. Employment-wise, as I've mentioned several times already, the number of jobs, okay, at the moment, they are still some 6.3 million jobs away from the pre-pandemic level. Okay, so that is why that's one of the dual mandate. Okay, one of the mandate, maximum employment. So they are still quite a distance away from achieving maximum employment. All right. Second point being price stability. Okay, price stability meaning inflation. Now with the with the rise of inflation and things like that, recently, and we even see a record hit in inflation. Okay. Powell mentioned during the press conference earlier that he expects inflation to remain above target, above the central bank's target, okay, 2% per annum target in the upcoming months, okay, but not enough to cause a change in policy stance, okay. So I don't know. I just feel like Powell specifically, okay, has been downplaying the whole rise in inflation. I'm not sure how the citizens of the United States are feeling, okay, with regards to the rise in prices and things like that, all right? But Powell, for sure, he's thinking that this whole inflation rise is just going to be transitory, okay? Even in the statement, it's been stated that, it's still going to be transitory, despite, this whole few months of rise in inflation. Well, we'll see how it goes from there, okay? So with this whole dual mandate, with this whole economic progress still far from achieving the Fed's dual mandate, okay, we are unlikely, okay, going to be seeing an interest rate hike for sure, okay, in the near future, at least for this year, okay, it's unlikely to gonna happen, all right? So with that, we will want to look at when, okay, will the Fed actually be tapering, right? So from the optimistic tone sent in the sent through the interest rate statement, okay, we are actually, I'm not sure if you guys can feel it, but I'm actually feeling this whole starting to become more like not really thinking about anymore. Okay, it's more like a I would say more inclined towards tapering talks. Okay, they did not. I don't think they mentioned much about tapering talk this time around, but I'm very sure they will definitely be discussing about that because of the good progress shown through the economic indicators. Okay, released. Right. So that is for the economic indicators side of things. Now, yesterday I mentioned, well, on Tuesday actually, I actually mentioned that another thing to take note is the Fed's, whether the Fed is concerned about the whole Delta variant, in specific, what they actually think about the recent hike, the recent spike in the number of COVID cases caused by the Delta variant, okay? So as a matter of fact, okay, during the press conference, Powell actually downplayed the impact of Delta variant, the impact that the Delta variant has on the US economic recovery, okay? Specifically, he said, I quote, "With successive waves of COVID over the past year and some months now, there has tended to be less in the way of economic implications from each wave. And we will see whether that is the case with the Delta variant." Okay, so it's more like, I take it as more like how the US has been adapting to this whole, first wave, second wave, third wave, fourth wave, and countless number of waves coming from the COVID-19. Okay, so of course, with the speedy vaccination programs, okay, they have been handling it well. So I guess as time progresses, as can be seen in many other countries as well, the whole handling of COVID cases, spiking and things like that has become more, I would say, the governments are doing more of an efficient and effective job in terms of containing the virus or handling the situations right now. Okay, so I guess this is what the Fed chair is trying to highlight to us, with the whole improvement, with the whole speedy vaccination program, and how the US government is handling the whole spike in cases. It is unlikely that the Delta variant will be, impacting the whole US economy as badly as it were to be, as badly as how the COVID cases were to affect back in 2020, okay, when it first started. All right. Now, so I would say, yeah, overall as a whole, this time round, although we didn't get much details on QE tapering from the Fed, we did get a pretty optimistic view, okay, voice, tone, whatever you want to call it, okay, from the Federal Reserve. Okay. Now, traders out there, if you guys actually stayed for the FOMC meeting, or actually you guys have looked at the chart before the currency call, you would have realized that, there's a strong weakening in the US dollar. Okay. Now, optimistic tone sent by the Federal Reserve. Why is it that we are still looking at a weakening in US dollar? Okay. Now, no doubt, optimistic tone stand by by the Federal Reserve usually leads to a strengthening US dollar. But in this case, okay, we have to know that, the US dollar is also a reserve currency, okay? Meaning, in times of uncertainty, okay, the market will go risk off. Risk off meaning, they will ditch they will ditch a majority of the risky assets, risky currencies, risky financial instruments, okay, and go for something more of a, safe haven assets, like bonds, treasury bonds, safe haven currencies being the US dollar, yen, Japanese yen, and the Switzerland francs. Okay, so because of the optimistic tone sent out by the Fed, this actually led to the market going risk on. Okay, so if I'm not wrong, yesterday the three major indices, the Dow Jones Industrial Index, the what's the other two again? Dow Jones, Nasdaq, and Standard & Poor, S&P 500. Okay, prior to the whole FOMC meeting, okay, it was actually down by I'm not sure how many points, but it was actually quite negative. All right. Now, post the FOMC meeting, okay, due to the optimistic tone sent out, there was actually a rebound in the three indices. Okay, so that is why we are seeing a weakening in the US dollar. So you might ask, how long will this whole weakening of the US dollar be? Okay, personally, I feel that it's going to be a short term, maybe probably like just a few days and things like that. All right, so unlikely it's going to last into next week. Okay, knowing that the week is coming to an end. All right, so that's the impact of the FOMC on the market. Now, another piece of news, economic data released that you guys should be paying attention to is the US advanced GDP quarter-on-quarter data that will be released later, okay, today at 20:30 GMT +8. Now, the market is actually forecasting an 8.5% increase in GDP, okay, as opposed to the previous quarter's increase of 6.4%, which is actually a strong increase. Now, if we were to see a strong increase in, if we were to see GDP result to be released as expected, as forecasted, okay, or maybe slightly higher, then that may actually strengthen the USD. Okay, that may actually spark more optimism. Okay, in fact, into the market. Okay, however, I will pay more attention if the actual result turns out to be below the forecasted figure of 8.5%. Or if it actually turns out to be lower than the previous 6.4%, then what this translates to will be, the market will be very curious about what the Fed thinks about this piece of poor data, okay, if it turns out very bad, okay. So yeah, just take note of this. It may be a bit of a market moving tonight, or rather later when the data is being released, okay. Now, with that, the next FOMC meeting will be held on September 23rd, which is close to 2 months from now, okay. So yes, like I mentioned on Tuesday, there's two more CPI data releases and 2 more US jobs report releases. Okay, so we'll be the Fed will have, I would say, plenty of data, okay, to look at, before making dropping any clues on when they will start tapering and by how much. Okay, so do we really have to wait till September? Not really. Okay, I'm going to bring your attention to this whole event that will be carrying out on 26th, from 26th to 28th of August in the United States. It's called the Jackson Hole Symposium. Some of you may not heard of this whole Jackson Hole Symposium. Like, what is it actually, right? It's actually a major annual conference, okay, sponsored by the Federal Reserve Bank of Kansas City, okay? So this whole symposium, why is it so important, right? Okay, why is it so important? First of all, it's attended by central bankers around the world and finance ministers, okay? Second thing, it's about the major topics that they'll be highlighting, okay, they'll be discussing during the whole symposium, okay? Major topics on economics, such as, financial stability, inflation, central bank's balance sheet, and so on and so forth. Okay, so what's the big deal, right? The big deal is that, many of the, I would say, experienced market players out there, market traders, okay, out there, they will usually pay attention to this annual symposium because based on history, okay, based on the previous symposium, the Federal Reserve more or less dropped hints, clues on their, I would say, monetary policy adjustments and things like that, okay? Like, for example, last year, the Federal Reserve actually announced the adoption of the average inflation targeting, okay? Previously, they were actually targeting an inflation of 2 to 3%. Right now, they are actually, they have changed, okay? Since then, they have changed the inflation policy to an average inflation targeting policy, meaning, they are targeting inflation across a period of time rather than looking at an annual basis, okay? So, such, I would say, clues or hints dropped by the Federal Reserve is actually very important. So, by now, you guys probably would have guessed what is the, what's the clue, the major, thing that the Federal Reserve may be giving the market during the Jackson Hole Symposium, okay? Yes, it's the tapering of QE without fail, all right? No way they're going to increase interest rate this year, all right? But we want to look at, whether they will give a hint on whether QE tapering will be carried forward, all right? So that is what we will want to be hearing from, we hope to be hearing from the Fed during the symposium, all right? Now, when it's near the symposium date, I will, update you guys again. I'll just, remind you guys again on what to look out for and things like that, all right? For now, yes, the September 23rd FOMC meeting is not the next major event to look forward to. It's the symposium that will be held, from 26 to 28, all right? Now, with that, okay, actually, there's another thing that will be released today, all right? It's the, okay, for what it's worth, okay, the ECB will be releasing their meeting minutes, okay, today at a tentative timing. To be honest, I won't pay attention. I won't pay much attention to it. Okay. Yes, they may be dropping details and things like that, but President Lagarde, okay, from the ECB has pretty much tell us what needs to be told during the ECB meeting. Okay, basically they are being dovish. They are not going to see interest rate hike, through 2023, because of the whole inflation, what do you call that? Inflation revision, the revision of the inflation policy. Okay, so if you guys are interested in what the central bank, the European Central Bank, they said they did, or they highlighted in their forward guidance and things like that, I'll paste a link here to Jean's article. Okay, it's actually a comprehensive article that covers what happened, during the ECB meeting recently. Okay, you guys give it a read and so on and so forth. All right. With that, just don't pay much attention. Don't have to pay much attention to the minutes late. That's going to be released later on today. All right. With that, I'll hand it back to Jinwei.
All right, thanks for that, Kim Hong. A very, very, very comprehensive session today. Now let's head to the charts with the dollar index with Scott Andrews from Forex Briefcase Australia. Scott.
All right, and thank you, Kim Hong, as well. You covered it extensively there. So what I'll do, I'll jump straight onto the charts. And look, the thing about being a trader, and if you want to aspire to be a full-time trader, you've got to be willing to realize that you've got to be flexible. So going into the FOMC, to be fair, I was expecting some volatility, but a little bit more of a bullish move on the US dollar, to be honest. But like Kim Hong mentioned with the equity markets, so there was a USD long that was called out earlier in the afternoon at about 3 o'clock by Jin, and it was pretty telling going into about 10:30 in the evening that what you'll see is that the US dollar itself is in a relationship with the equity markets, and we just saw it cooling off a little bit as it got to 110.38 or so, and it was a nice time to take profits. But really, it is it's something to look for with the Fed for Jackson Hole. I was going to bring up some info on that, but really, if you need to rewatch what Kim Hong said and make sure you have a plan and remain flexible. So we do have the US dollar coming close to 92. My thought is that GDP, if it is bullish after the release, 8:30 tonight, in regards to coming in higher than expected, could see buying opportunities. We do have a lot of pairs extended, the pound US dollar as well. So, stay tuned on the trading floor in the ECOFIN group, and I'll be sharing some thoughts. And frankly, that's it for now. So I want to wait to see what happens at this 92.06 level, even 92 flat. So for now, guys, waiting until it touches and then waiting for price action to react here.
Okay, thanks for that, Scott. Yep, so today is Thursday and the currency in focus is yen and gold. And I'm going to get Daniel here, Daniel from LCM trading coach at LCMS Traders, to share on the currency in focus. Daniel.
Yes, Jinwei, thank you very much. So, Kim Hong mentioned already about FOMC last night. There was lots of movements that moved in, but now focus is yen. So as we look forward, any news coming in for yen, there isn't too much coming in from the yen pairs coming in that it will impact. Of course, we already mentioned about the GDP coming in tonight at 8:30. That will be something will be interesting to take a look at that. And then on Friday, we have a lot of this unemployment rate, industrial production, but I don't really see it impacting too much in the currency markets for such. It may be a little bit housing starts, not too much as well. Usually I don't see too much of a movement. Continue to move down here. Okay, maybe US have some employment benefits. We'll see how it goes from there. Also don't think there's too much of impact here. And so even next week, if I look at yen pairs, of course, I'll look at manufacturing PMI above, although it may impact slightly for Monday. Household confidence not too much. Yen, in fact, a lot of news coming in, CPI data as well, but they are not really. Japan is not really too big in terms of consumerism. So inflation is going up is more or less controlled. So not too much impacting there as well. So not too many news that will cause a lot of impact for the yen pair. So mostly be impacted by, like what Gipon is saying, risk on risk of situation, probably a safe haven currencies. So let's look at the charts here. And we look at the US yen. When we look at the US yen pairs coming in, okay, these news are actually, these movements here is being impacted by the FOMC news coming in. What do I look out for right now with the news coming in? Yes, a lot of expectations, was actually going into probably expectation that with probably good GDP numbers, and they're expecting the FOMC news to have lots of good information about tapering, pulling of tapering, and stuff. But it didn't happen, right? Like Timon said, they did nothing. But of course, they were a bit optimistic. So that's where a fall came in here right now. Okay, so with this trend coming in, I'm going to expect a possible movement of the US yen pushing downwards, actually. Probably coming down. I don't think it'll go all the way down. Maybe it goes to the previous low, moving down for the rest of the week coming in. Okay, so probably you need to break below like 109.6, breaking below 109.6. So let me put this a little bit more realistic here wise. I'm probably going over 109.6, drip below that. Put it about like 30 pips or 40 pips of stop loss, going for a quick 40 to 50 pips of take profit target. Of course, if it continues, then we can look for a possibility of probably even 80 to 90 pips, but take profit. However, looking at this, I don't think it will go any further down. Right now, you can see overall for the past since 9th of July, it has been like in a consolidation phase here. So I would say, a short-term wise, we're going to look for a quick trade below again 109.6. Okay, for 30 pips stop loss, you can go for like a 40 or 50 pips of take profit targets here. For the just because right now it seems to be a US dollar weakening with no firm news coming in. Okay, now euro yen. Now, euro yen has been interesting. Same thing like the US yen has been doing a real nice consolidation. And, looking at this one here, I'm going to have I always feel as if there's a biases for a sell for the euro yen, but it has to break strongly below 129.55, at this level. And it's not doing so. It has been ranging really very nice between 130.2 resistance zone here and 129.55 here. Do I think moving forward will there be any movements change here? I don't think so. For the next week, I believe that if I look at a 4-hour chart, I'm going to firmly believe that it's going to continue to consolidate between this range, within this range here. So I don't think that we should be looking for taking a trade, because there's no firm directions coming in. Okay, and lastly, looking at a pound yen. Pound yen, I'm looking at this channel here. For here 4-hour chart, look at the channel coming down. So looking at this, but with the FOMC news that came in, it just moved up, risk on situation, where pound continues to strengthen with recent days. Now, I don't think right now it's probably going to hit the resistance here, and my thinking is that it will hit the resistance and probably come back down. Okay, pushing back down with the UK news. If it's going to impact by the COVID-19, then yes, it's going to happen. But however, we have to wait for it. So I think right now, for these 2 days, it's probably going to continue to push upwards. And then if it comes down, breaking below 152.95, I'll be looking for a sell. sell here. I'll probably book it for like 50 pips of stop loss and going for a 120 or 100 pips of take profit. Target 1:2. But if it doesn't break down below that, then with the opening up of the UK, if next week we continue to see good news from the UK, looking at where they continue to open up good data coming in, with news coming in, then I'll probably, if it breaks, but it must break above the resistance zones like one at 153.9. Then you'll probably be going up, but I'll be waiting for that to happen before even planning for that. Right now, I'm still looking for continuous sort of downtrend coming in, hitting the resistance and bouncing off down towards the 151.340. Okay, so that's something I would like to share with you for the yen pairs. Now, as we look at gold, right now, I was just looking at it last night, and I was saying that it just consolidated within this region. Here, the box, I can see I was drawing the box in. So let me zoom it in, and I was looking at it and say, hey, with this, I was looking at possibly good news from FOMC news coming in and possible goal to push further down. But as you can see, it did not happen. Right now, it is my resistance zone. I'm going to be very interested in see what's going to happen right then. If this looks as if like an inside candle going to be forming, and then I'll be looking at this. If again tonight, if you look at the the GDP numbers and it didn't perform too well, then you'll possibly be looking for a buy trade coming in, breaking out of my resistance zones. Where would it probably be going? It could go all the way to 1859 here, but if anybody is looking to trade here, I'll be looking at possibly moving all the way to 1832 level, or 1832.58 kind of zones here, because previously it is hitting all high before it comes back down. So let's move it down here and possibly moving up to this range, 120 pips of a take profit target here. So maybe you're looking at like 80 pips for 140 pips, 120, 140 pips of take profit target. But right now, I would like to say that we still got to wait for the evening news for the GDP. If it's good news going to come in at 8.2 or even slightly higher, telling us that the economic news of the US is going strong, then you probably see a bounce off down and pushing it down towards, if it breaks coming down, then I would say it will go all the way to 1793.93. So, but I don't really think that we should be looking to sell gold right now, reason with the fact that gold is a safe haven kind of assets kind of thing. So I'm looking at right now, the sentiment is not too great. People are always hoping for the US economy, to be good. But right now we have to see it. The fact that there's no discussion of tapering ahead right now tells me that they're being cautious. So the possibility of a gold moving up, to me, is a bit higher. Okay, so I'm looking for a buy trade for gold this time. That's all for yen and gold.
Okay, thanks for that, Daniel. And just want to do a quick disclaimer here. Any information shared today in this session is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. All right, so before we end off, just want Daniel here to share a bit about every Wednesday there's this live trading session in the LCMS Traders Club. Yeah, so Daniel, do you have any trade ideas that you would like to share really quick with the audience?
Okay, so as you know, just last night we have a live trading session. So we have it every Wednesday at 9 p.m. We're trading the US market news movements. Okay, but of course we do know what had happened. It's more or less there were some movements, but it didn't move too much. And the reason is because early in the morning on Thursday at 2 a.m. is the FOMC news. So there wasn't a news, but we had some trade ideas that we were discussing. Indeed, we were more or less a bit looking at the news. We were looking at Aussie and New Zealand USD at that point of time. Not too much news happening, but we were looking for if it breaks down, and we look for a sell. But with the US news coming in, we were also focusing on the non-US pairs and things like New Zealand yen. We were looking for it to, can see here, even look, this is a 15-minute chart. So we were always looking for short-term trades, or like for 2-3 days. For on Wednesdays, if we saw that we at that night, we saw that there was a like triangle coming. If it breaks down and going below 76.2, we probably be looking for a trade. But I mentioned that because FOMC is coming at 2 o'clock, I was just firm believer in LCMS Traders Club 5 steps method, where step 5 is the coming news. It has to be a short-term trade. We cannot, because FOMC news, although it's related to the US, it could hit a lot of other currency pairs as well, naturally, because US is a global economy, one of the biggest economy in the world. Right now, it did move down. Okay, it did move down 76.2, but it went down to only about 10 pips before it pushes up, and with the news coming in again. Really very nice, the risk on, risk off situation. So a lot of the yen pairs will actually have weakening and continue to go up. But you can see right now it's still in the consolidation phase. So again, I'll rattle on like as I'm coaching. But again, with this news, yes, it can be, but we have to be certain. Know that with the news coming in, we have to be careful about the trade ideas and how long term we need to hold. And we're also looking at Aussie yen coming in, and we were also looking at this one here, looking at it and saying, hey, if it breaks down, however, compared to New Zealand yen, we won't be interested in to take a look because it's so close to the support zone. So in the end, there weren't much trading done last night. We were also looking at too much trade ideas as well, because it was clouded by the expectation of the FOMC news. So the decision would be that we have a couple of trade ideas, but we have to hold until FOMC comes in, let the dust settle, see which direction the market is moving before we come in. And so looking at it, we will ask the members to probably be looking at the ECOFIN, the LCMS Traders Club ECOFIN site for more trade ideas coming in to know how to trade. So sometimes no trading is also a win. So, but looking at all this, you may be wondering, we have group coaching sessions on Mondays, we have live trading sessions on Wednesdays. How do you join in, right? So what I would suggest everyone to do is to go into LCMS Traders Club. What's the website? It is tradersclub.lcms.com.sg. Here, this website, this website is for you to register, where the club and the platform is worth thousands. If you are serious in trading, so without a doubt, this is the place to be if you want to be profitable. Right now, you can see here, lots of members loves the club here. We can not only get the coaching sessions, you also get Forex Signals, webinars coming in, daily analysis, market watch list, and many, many more. So what you need to do here is click on this for $49 a month. You get lots of things that will benefit you for your Forex trading journey. So just click in, sign up, and submit, and I'll see you in the LCMS Traders Club.
Okay, thank you, Daniel. Yep, I pasted the link in the chat. So if you're interested, to check out the website. And that's the end of the session today. We'll see you guys tomorrow, Friday, for the Canadian dollar and cryptocurrencies analysis. Thank you and goodbye.